Welcome back to Regional Roundup. It's now time to delve into the Zimbabwean market and we look at the Zim Mining Index first. And as you can see, flat on a one-month basis, sitting at 77 points on the industrial front. Let's quickly check in on those numbers. Again, a flat performance. And joining us now live from Zimbabwe is Tinashe Mapara, equities dealer at MMC Capital. Thank you so much, Tinashe. We know that there's been very light volumes. We also know that the foreigners have been very involved in the Zimbabwean market. Can we then conclude that foreigners have actually been sitting on the sidelines for some time now?
Yeah, I think the participation of foreigners has been restricted of late, but of late we have seen them coming back, and we have seen action being concentrated in a few counters, the likes of Econet, Delta, Insco. There has been huge interest, but largely on the other counters, the trading has been thin.
Let's delve into some of the stocks now. We've got Ariston. Let's touch on that. It seems that they are going to want to authorize share capital worth around $1.6 million, looking at around 1.6 billion ordinary shares. It is all about raising capital at this point. Do you think it's going to be taken up quite positively by shareholders and the investor community?
Yeah, judging from past rights issues, the take-up hasn't been quite impressive. We have seen an average of about less than 50% subscription on the rights issues that have taken place to date. But Ariston, I think they are pretty optimistic. They want to raise their business to recapitalize it so that they can start operating profitably again. And now media reports that the biggest shareholder in Ariston has sold a significant 42% of the stake in the company to a South African investor. And I think all this, with the rights issue coming, would turn the fortunes of the company. Today, the counter trade at 1.3 cents, and the rights issue subscription is at price is at 9 cents per share.
Yeah. Let's touch on Rio Zim. There's been various troubles in the company, the biggest being indebtedness. The company issuing another cautionary statement. It seems that major shareholders are going to oppose the application with regards to ensuring that the company is going to adopt the sufficient funds needed to solve some of the issues when it comes to debt. Are you confident that the company is going to resolve these things? And with regards to the share price performance, I'm sure that it's been reflected with regards to the uncertainty that we've seen. Yeah,
the share price took a very huge knock last year, but the developments on the ground indicate that there is a proposal on the ground that has the support of the major shareholders, which will remove the uncertainty on what the major shareholders, what the shareholders would vote for in the event of an EGM. But currently, what then adding another twist to the tale is that the lenders, a consortium of banks, has actually launched, made a high court application to place the counter under judicial management, and that could be another source of interest in the counter.
TSL, we know obviously a tobacco company. We saw revenue increasing by 29%, profits declining by 26%. We saw a lot of downward pressure when it comes to tobacco prices, operating costs increasing, and we saw also lower than expected tobacco output. Do you think that the next earnings season is going to surprise to the upside? Do you think that TSL can get its balance sheet in order?
I think it will depend on the current the forthcoming tobacco season. I think the preparations haven't been so well, and we don't anticipate a major increase in the tobacco output in the coming year. So the earnings might not be as good in the coming year, or they might not improve significantly in the coming year.
When we look at Hunyani, this company performing quite well, volumes increasing by around 9%. Export market still not looking that good, but we saw operating profit coming in at a fair level as well, around $2.2 million. Do you think that this can be sustained? And I suppose a big focus is going to come into the export market.
Yeah, I think the earnings can be sustained. What they need is to maintain the current momentum that they are on, and probably grow their export base, which would then give them the extra leverage that they extra mileage that they need to grow their bottom line.
Tinashe, let's also touch on the MPC review as well. What is your sense with regards to the monetary policy stance right now? It seems from an economic perspective, things are starting to stabilize quite extensively. Are there any big points there that you think we need to focus on going forward?
I think what the MPS will bring stability to the financial sector. Of note is the deadline of 1 April 2012, where the banking institutions which are not compliant with the minimum capital requirements will be forced to close. And at the moment, 5 institutions, Kingdom, Royal, ZABG, Genesis, and Renaissance, haven't complied with the minimum capital requirements. So that deadline is strict, and if banks are not compliant by that, we might see closures. We also have seen the bank is also moving in to manage the liquidity situation on the ground. We've seen them increasing the prudential liquidity ratios from the current 25% to 27.5% by March 2012 and 30% by May. So I think overall this will bring stability to the financial services sector.
Fantastic. Tinashe, we have to leave it there. Thank you so much. Tinashe Mapara, MMC Capital, live from Zimbabwe. Now, recently, the Nigerian Stock Exchange introduced new terms for companies looking to list on the market. Earlier, Uchu Okoronkwo spoke with Ade Bojomo, Executive Director of Market Operations and Technology at the NSE, and asked for his opinion on the thinking behind new guidelines.
When we came in 2011, one of the key themes that we pursued as a management team, an executive management team, is actually to grow the market within the Nigerian capital markets and deepen the market. Now, there are many angles to actually growing and deepening the market, really, and one of them is to actually encourage more companies to list in the market. Yeah, as a prerequisite to that, it was very important for us to visit our listing rules and regulation with a view to maintain a very high quality in terms of those rules, but actually expand it in such a way that not only do we attract companies which have a good solid track record, i.e. 3 years of doing business, a good financial track record, but we also encourage growth companies, because if you look at the nature of the Nigerian economy, it's a developing economy. There are very good companies out there who have excellent growth prospects, they have strong technical partners, and they should actually be brought on board to list in the Nigerian capital market, to raise funds and also allow Nigerians to participate in the wealth creation.
Now, under the ASEM guidelines or listing guidelines, we've seen that some companies can list with only 2 years of comprehensive business plans, or with only 2 years of operation. There is concern about the risk that investors may be put in if a company is not strong enough.
Yeah, I mean, the reason why we've aligned the listing the way it is quite to protect investors. It is very, very important. And that's why you've got 3 categories under the new rules. Yeah, you've got the main board. With the main board, the requirements are very, very stringent. But also with the SM capital is not like a secondary market. It's actually also a very, very key market for us. And we have some prerequisites here in terms of listing there. Yeah, for example, you know, there must be very clear forecasts in terms of what the company plans to do. Those forecasts have to be validated. They have to demonstrate strong technical partners working with them to give us some credibility on those forecasts as awarely. But also, you know, the companies also have to buy, they have to get a number of share capital base, and people have to hold those shares for a minimum period of time. So you won't get, if you like, the issue around the investor confidence, or at least the rules that were put around it and the controls were put around it should hopefully guard against that.
Now, we know you've already sent the proposal to the Securities and Exchange Commission, but how soon can we expect to see these rules to be implemented?
We're working very closely with the Securities and Exchange Commission. The rules have obviously been signed off by the Council of the Exchange. The Council is the board of directors, and we're extremely positive that the Securities and Exchange Commission should have this approved very, very shortly. It's a key part of our joint objective to grow and develop the Nigerian capital market in a very stable, sustainable, and high-quality manner.
Now, like you said, your main aim is to attract new companies on the exchange. Give us an update on how that is working. Are there any new listings so far?
Yeah, I can tell you what has been done. You know, one of the key things that has been established in the exchange is the setting up of a new listings and sales and retentions department. And they've got a two-pronged, if you like, agenda. One prong of that agenda is, of course, to look after the existing listed companies and offer value-add services for those listed companies.
NABIM Global has found Namibia to be attractive with regards to valuable natural resources. We now take a look at what the impact of them entering the Namibian market is on mining and with regards to oil exploration in Africa with Donald Watkins, the CEO and managing partner of NABIM. Thank you so much, sir, for joining us. Great to have you on the program. Let's just delve into what NABIM actually does. It was formed to secure licenses and concessions when you look at oil, diamonds, rare earth elements and uranium. Masada essentially is going to provide the infrastructural support and of course the decision has been taken to create headquarters in Namibia. Take us through the synergies between the two companies and why Namibia?
Well, Masada, the parent company of NABIM, has been in the infrastructure business for the past 38 years. We started in cable TV in the United States. We expanded to cellular telephone in the United States and UK, and then we went into electronic home security and built that into the #1 private electronic home security company in the United States and UK. And so 3 years ago, we expanded our Masada core business, which is now in the waste to energy area. We expanded it into Africa. We were already working in South America, Europe, Asia, and we thought Africa was the new frontier for opportunities to empower and to contribute to nation building. We formed NABIM when we realized that if we're going to be in Africa anyway, doing significant infrastructure work, we ought to also provide empowerment opportunities in the exploration and production of oil, diamonds, minerals, etc. And so Namibia, when I first came here, I've been here 3 or 4 times. When I first came here, I was very impressed with the infrastructure development, with the quality and efficiency of government services, and with the comfort level to do business. And so we thought that Namibia would be the perfect place for a hub and spoke system, with Namibia being the hub, and the spokes would be places like South Africa. We're looking to work in 3 places there: Joburg, Durban, Mandini, and as far up the west coast of Africa is Sierra Leone.
Yeah. Mr. Watkins, also just taking a look at the fact that you are actually focused on waste technology solutions as well, and the fact that you're also in the mining sector, can we then assume when it comes to waste solutions that you are predominantly focused on waste emanating from the mining industry?
Well, our predominant focus when we hit the African continent was to take ordinary household waste, and there's plenty of it in Africa and elsewhere in the world, and use the ordinary household waste stream to convert that into energy, namely ethanol and back to petroleum on some segments of the waste stream. But since we have been in Africa, we have been contacted by mining operations, and they have indicated an interest in having us take their waste and convert their waste into energy. And we're in talks with several of those companies now. So while we started with ordinary household garbage and using that as the source for converting it into energy, we have also expanded our opportunity to convert waste to energy by engaging in these synergistic conversations.
Mr. Watkins, where are you going to have this waste to energy plant? Because Namibia only has a population of 2 million people. It's a very low number when you look at it relative to South Africa. And how are you going to transport this waste, and then the energy that is created, who's going to use up this energy? Is it going to be sold to various countries across the continent?
You've asked 3 good questions. We started waste energy in Freetown, Sierra Leone. You know, that's a population of 1.2 million. That's enough garbage to host a number of waste energy facilities. And then we traveled to Senegal next, and then we traveled to Joburg next, up to Durban, and then to Mandini. And so in terms of the waste to energy conversion, that will not be immediate in Namibia. What will be immediate in Namibia is the NABIM mineral exploration and production, such as uranium and diamonds. And what will be immediate, we've already applied for oil blocks to do those in joint ventures with the multinationals. And so that is the way the two companies will roll out in Africa.
With regards to some of the prospecting rights that you're looking at right now that you already have, we're looking at licenses when it comes to basic and rare earths, precious stones, even oil blocks in Namibia as well. What kind of opportunities are there? Are you going to be working with the private sector? Are you working with governments predominantly? What are your plans on that front?
Let's take Namibia. Let's take Namibia. We applied for an oil block. Our preference would be to include the government as a partner in our exploration and production activities, with Masada being the parent company, putting up private capital. We will try to include the government as a partner in every one of these ventures, because it's an empowerment opportunity not only for the private sector, which is Naburn and Masada, but also for the government. And there are only so many ways to generate revenue. If you're a government entity, one is to increase taxes or tariffs, and that's not an attractive alternative. The other is to get financial empowerment by joint venturing with stable and experienced companies that have a track record for producing dynamic economic growth. We have that track record across 4 prior business cycles, and so we want to be a partner in progress with the Namibian government and with other governments throughout the African continent.
Mr. Watkins, we have to leave it there. Thank you so much for joining us today. Much appreciated. Donald Watkins, the CEO and managing partner of NABERM, live from Namibia. We're going to a short break, and when we return, we head over to Lagos for a look at how the Nigerian markets fare today. Stay tuned to Regional Roundup right here on CNBC Africa. We're first in business worldwide.